Good evening. For nearly 50 years, the global economy has revolved around a powerful packed oil, the world's most vital commodity, priced exclusively in US dollars. This petrodollar system emerged from the chaos of the 1970s, when the US abandoned the gold standard and faced an oil embargo that sent prices soaring. In response, the US struck a transformative deal with Saudi Arabia, military protection and advanced weaponry in exchange for pricing oil only in dollars and reinvesting oil profits in US debt. This arrangement created a global demand for dollars, as every nation needed them to buy oil. Other OPEC members quickly followed Saudi Arabia's lead, cementing the dollar's role at the heart of global trade. The more oil the world consumed, the more dollars it needed, locking the US currency into the machinery of international commerce. For the US, this meant a captive market for its currency and debt, enabling it to borrow cheaply and run large deficits. For Saudi Arabia, it guaranteed American military support and security for its monarchy and oil fields. This symbiotic relationship became the bedrock of US-Saudi ties and the foundation of American financial dominance. The petrodollar system wasn't just about economics, it was a masterstroke of diplomacy that shaped the modern world order. It allowed the US to maintain global influence even as its manufacturing base shifted. The system's stability relied on mutual benefit security for Saudi Arabia, financial supremacy for the US. Over time, this arrangement set a global precedent, making the dollar indispensable for international trade. The petrodollar became the invisible engine powering America's rise as the world's financial superpower. But as the world changes, the foundations of this system are starting to shift. The petrodollar didn't just make oil a dollar business, it made the US dollar the world's reserve currency. Central banks everywhere stockpiled dollars to buy energy, giving the US currency unmatched global status. This exorbitant privilege let America finance imports and investments simply by printing more dollars, a luxury no other nation enjoyed. The US could run deficits and spend freely, exporting inflation to the rest of the world. Dollar dominance also gave Washington a powerful weapon: financial sanctions. By controlling global payment systems, the US could freeze assets and cut off adversaries without military force. For countries like Iran and Russia, exclusion from the dollar system was economically crippling. The system's strength rested on trust in the US economy and its political stability. US Treasury bonds became the world's safest asset, attracting global savings. For decades, this trust held firm, keeping the US at the center of global finance. The petrodollar system recycled global wealth back into America, reinforcing its economic leadership. But as new powers rise, this order faces unprecedented challenges. The world that birthed the petrodollar is fading, replaced by new economic giants and shifting alliances. China, now the world's second-largest economy and top energy importer, sees its reliance on the dollar as a strategic weakness. Beijing is pushing to pay for oil in yuan, not dollars, and energy producers are listening. China has already settled oil trades with Russia and Iran in yuan, and is negotiating with Saudi Arabia to do the same. In 2023, China and the UAE completed their first yuan-based LNG trade, a crack in the petrodollar's foundation. For Gulf states, diversifying away from the dollar is both an opportunity and a risk. It strengthens ties with Asia, but could antagonize the US. The Middle East is now a battleground for influence between old and new powers. As countries hedge their bets, the era of dollar dominance is being quietly challenged. The global financial order is no longer set in stone. Enter BRICS, a bloc of emerging economies now reshaping the global landscape. With new members like Egypt, Iran, the UAE, and Indonesia, BRICS has become a powerhouse, representing over 40% of global oil production. The group's mission: create a multipolar world and reduce dependence on the dollar. BRICS is pushing for more trade in local currencies and developing its own payment systems to rival the West's SWIFT network. Its new development bank aims to issue a significant share of loans in non-dollar currencies. The expanded BRICS now rivals the G7 in economic clout and represents more than half the world's population. While internal divisions remain, the bloc's collective push for de-dollarization is gaining momentum. For many countries, BRICS offers a seat at a new table, one where their voices matter more. The rise of this coalition signals a real challenge to the old financial order. The world's economic center of gravity is shifting south and east. China's challenge to the dollar is methodical and ambitious. It's building the infrastructure for a petro-yuan world, signing currency swap deals, opening Chinese banks in the Middle East, and pioneering digital yuan payments for oil. The Shanghai International Energy Exchange lets traders buy oil futures in yuan, with the option to convert yuan into gold, a clever way to build trust. China's cross-border interbank payment system, or CIPS, is growing as an alternative to SWIFT, clearing international payments in yuan. These moves make trading in yuan easier and more attractive for energy exporters. For countries wary of US sanctions, China's parallel systems offer a lifeline. The petro-yuan isn't just a dream, it's becoming a reality, step by step. By building these networks, China is laying the groundwork for a new era in global energy markets. The dollar's monopoly is no longer unchallenged. The world is watching as the balance of financial power shifts. The push to move beyond the dollar isn't just China's project. Many nations are hedging their bets. US financial sanctions like freezing Russia's reserves after the Ukraine invasion shocked central banks worldwide. Suddenly, dollar assets didn't look so safe. They could be seized overnight for political reasons. Countries from Brazil to India began seeking alternatives, fearing they could be next. The economic center of gravity is shifting to Asia, and oil producers like Saudi Arabia now sell more to China and India than to the West. Trading in local currencies reduces costs and currency risks. Doubts about America's long-term reliability as a security partner are also driving diversification. In the Middle East, perceptions of US withdrawal and unpredictability have pushed countries to strengthen ties with China and Russia. Reducing dollar dependence is part of a broader strategy for autonomy. Nations are building new alliances and financial systems to avoid being caught off guard. The old certainties are gone. Flexibility is the new rule. The world is preparing for a future where no single currency dominates. Strategic hedging is now the name of the game. Saudi Arabia is the ultimate swing state in this new global order. Invited to join BRICS in 2023, the kingdom has kept the world guessing, neither accepting nor declining. This ambiguity is strategic. The US remains its security guarantor, but China is its top trading partner. Joining BRICS could jeopardize US ties, especially with defense deals on the line. But deepening links with China and BRICS makes economic sense as Asia's influence grows. The BRICS invitation is a bargaining chip, giving Riyadh leverage in talks with Washington. Saudi Arabia wants to lead, not follow, and isn't eager to share the spotlight with rivals like Iran. Instead, it's pursuing a multi-alignment strategy, partnering with the US, China, and Russia, without committing to any one camp. For now, keeping its options open is the kingdom's smartest move. In a world of shifting alliances, Saudi Arabia is playing the long game. The petrodollar's era of absolute dominance is ending, not with a crash, but a slow, steady shift. The dollar won't be replaced overnight, its deep markets and legal protections remain unmatched, but no single currency is ready to take its place. We're moving toward a multipolar world where trade is done in a mix of dollars, euros, yuan, and others. The US will lose some of its exorbitant privilege, financing deficits and imposing sanctions will get harder. Washington will need to rely more on diplomacy and alliances, not just financial muscle. For the world, this means more autonomy and a greater say for emerging economies. But it also brings complexity, volatile exchange rates and competing trade blocs. The journey away from dollar dominance is uncharted territory. It's a step toward a post-American world, shaped by many capitals, not just one. The new order will be more balanced, but also more unpredictable. For businesses and governments, adaptation will be key. The age of the single currency superpower is giving way to something entirely new.